Venezuela has suddenly gone silent. Their silver operations, accounting for 12% of worldwide distribution, are inactive. But that's not why the value soared. The actual explanation is what occurred in the 6 hours preceding the shutdown. Something shifted in the shadows. Something that wasn't intended to shift. Something that reveals this wasn't an incident. Let me transport you back to December 23rd, Christmas holiday. The exchanges are shut. The brokers are on holiday. The news rotation is inactive. This is when they operate. This is when they believe nobody's monitoring, but we were monitoring. We had observers on the location. We had contacts inside the Venezuelan mining industry. And what they revealed us will transform everything you believe you understand about this situation. At 2:47 a.m., Caracas hour, 3 cargo aircraft departed Simon Boulevard International Airport. Destination, Miami International. Cargo record, mining equipment. But mining equipment doesn't mass 847 tons. Mining equipment doesn't demand armed security to the runway. Mining equipment does not get transported in the middle of the night when the airport is intended to be shut. 847 tons. Let me repeat that figure because it's essential to comprehending what truly occurred here. 8 to 47 tons of mining equipment transported onto 3 aircraft in a 47-minute interval. That's 18 tons per minute. That's 300 kilodalars per second being transported from protected storage locations to aircraft cargo bays. You don't transport mining equipment that rapidly. You don't transport mining equipment in the shadows. You don't transport mining equipment with armed precision and zero documentation paths. But you do transport silver that method. You do transport precious materials that method when you're attempting to evacuate strategic stockpiles before a situation strikes. 847 tons of mining equipment. Let me position that in context for you. 847 tons is roughly 27 million troy ounces of processed silver. That's approximately 15% of Venezuela's complete annual silver manufacturing. That's more silver than most nations manufacture in 2 years, transported onto aircraft in the shadows 6 hours before the operations went inactive. But here's where the narrative gets truly sinister. Those 847 tons weren't arbitrary figures pulled from nowhere. Our examination of Venezuelan silver manufacturing information shows that 847 tons represents the precise quantity of processed silver that should have been positioned in Venezuelan's central bank storage as strategic stockpiles. Every sovereign nation maintains strategic metal stockpiles: gold, silver, platinum, protection policies against currency failure, emergency resources that can be converted in times of situation. Venezuela's strategic silver stockpile was calculated at 850 tons as of December 2024. 3 tons remained in the storage. 847 tons departed on those missions. This wasn't an evacuation of mining equipment. This was the total dissolution of Venezuela's sovereign silver stockpiles. This is where the sequence stops generating logic. 2:47 a.m. 3 aircraft commence loading procedures at Simon Bolivar International. 3:15 a.m. Venezuelan Armed Forces establishes boundary around airport cargo facilities. 3:52 a.m. All civilian missions redirected from Caracas airspace for maintenance procedures. 4:18 a.m. First aircraft departs. Venezuelan airspace transmits emergency transponder signal 4:41 a.m. Second aircraft airborne mission trajectory direct to Miami International 5:33 a.m. Third aircraft wheels up, but here's the irregularity. This one turns northeast toward the Caribbean. 6:15 a.m. All 3 aircraft are airborne. 7:23 a.m. Venezuelan state broadcast goes silent. 8:41 a.m. Power infrastructure failures spread across Zulia province. 9:58 a.m. Las Cristinas Mina reports technical problems. 10:34 a.m. El Kaya mining facility evacuates all workers. 11:12 a.m. Complete mining industry shuts down procedures. 12:45 p.m. Government announces national mining emergency. But here's what they didn't reveal. Here's what you won't discover in any press statement. At 1:17 p.m., precisely 32 minutes after the mining emergency was announced, silver contracts in New York surged 7.8%. Not steadily, not over hours, in 4 minutes. An aggressive explosive shift that activated trading suspensions across multiple platforms. Someone understood, someone was prepared, someone was ready for this precise pattern of events. The market doesn't shift like that on announcements. The market shifts like that on intelligence. Intelligence that moves faster than reports. Intelligence that circulates through networks that don't exist on your broadcast screen. Intelligence that originates from inside the procedure itself. Because this wasn't just about transporting silver. This was about synchronizing the exchange. This was about arranging before the situation struck. This was about converting a strategic metal evacuation into the largest commodity manipulation operation in modern civilization. Let me demonstrate you the proof. Let me demonstrate you the trading behaviors that confirm this was coordinated from the highest authorities. In the 72 hours before the Venezuelan shutdown, silver call options activity expanded by 247%, not 284%, 2,847%. Someone was acquiring massive quantities of leverage positions that silver would surge aggressively upward. These weren't retail participants. Retail participants don't have access to the kind of capital we're discussing here. The average transaction magnitude was 47 million per arrangement. These were institutional entities. These were organizations with inside intelligence about what was approaching. But it becomes worse. The options weren't just calls. They were precisely calls with strike values at 73 to 77 and 82. Those weren't arbitrary figures. Those were objective values, value thresholds that someone understood the market would reach after the Venezuelan procedure was concluded, and they were accurate. Silver touched 73.40 on the day of the shutdown. It reached 77 soundors 15 2 days later. It climaxed at 8277 precisely 1 week after the Venezuelan operations went silent. This wasn't market conjecture. This was inside exchanging on geopolitical awareness. This was capitalizing a situation that someone had advanced understanding about. This brings us to the aircraft because those 3 cargo missions weren't the only metal transporting that evening, and they weren't the only missions that had inside intelligence about the schedule. Flight monitoring information shows a behavior that should alarm anyone who comprehends how the silver market truly functions. Between midnight and 6 a.m. Caracas hour, 11 aircraft departed Venezuelan airspace, not 3. 11. Let me analyze these missions for you because each one reveals part of the narrative. Flights 1-3. The evident ones. Simon Believer to Miami International. The diversion missions, the ones they desired us to observe, the ones transporting some silver, but not the primary cargo. Flights 45 departed from Marabo International. Destination Panama City. These missions transported Venezuelan oil administrators and their families. Emergency evacuation of key workers before the situation struck. Flight 67 departed from Porto Orduz, private airfield, no civilian traffic management. These missions transported mining equipment, genuine mining equipment this occasion, specialized extraction machinery valued hundreds of millions of dollars. But here's where it becomes truly fascinating. Flights 89 Russian registration, Antonov and 124 cargo aircraft, the kind of aircraft you utilize when you need to transport something very massive, very distant, very discreetly. Departure location, Cana National Park, a national reserve with no airports, no landing areas, no infrastructure for heavy cargo aircraft, except there is infrastructure, classified infrastructure, armed forces infrastructure that doesn't display on civilian charts, underground storage locations connected to the Venezuelan silver mining system, storage locations that have been gathering processed silver for years. These Russian missions didn't just transport silver, they transported the gathered manufacturing of Venezuelan operations that had been redirected from international markets for the past 18 months. Silver that should have been distributed to industrial consumers. Silver that should have been accessible to the global supply network. Silver that was instead accumulated in classified underground bunkers waiting for precisely this instant. The Russian aircraft each transported roughly 280 tons of processed silver. That's 18 million troy ounces per aircraft. 36 million ounces complete departing Venezuelan territory on Russian cargo. Aircraft registered to shell corporations with connections to the Kremlin. But here's the element that makes this procedure genuinely terrifying. Those Russian aircraft didn't travel to Moscow, they traveled to Vladivostok. Why Vladivostok? Because Vladivostok is the terminus of the Trans-Siberian Railway, the identical railway system we've been monitoring in previous analyses, the identical transportation corridor that's transporting Russian resources directly to Chinese production locations. The silver that departed Venezuela on December 23rd arrived in Chinese refineries by January the 2nd, 10 days from Venezuelan storage to Chinese production facilities without passing through a single Western-controlled shipping passage or monetary settlement structure. This is the infrastructure of de-dollarization in operation. This is the Belt and Road program functioning as intended. This is the strategic architecture that makes U.S. maritime supremacy obsolete in the age of ground transportation passages. Flights 10 and 11 are the genuine mystery. These aircraft departed from separate locations 3 hours apart. Flight 10 from Maracaibo, Flight 11 from Ciudad Guayana. Both aircraft were chartered by Chinese state corporations. Both transported Venezuelan administration officials and their families. Both traveled directly to Beijing. These weren't refugee missions, these were diplomatic missions. These were the individuals who coordinated the procedure receiving their compensation. Safe departure from Venezuela, diplomatic protection in China, and presumably substantial monetary settlements in offshore accounts that will never appear on any formal records. The The financial incentive structure of this procedure is truly impressive. The Venezuelan administration didn't just surrender their silver. They were compensated handsomely for facilitating the extraction. Our estimates based on commodity values and timing propose that Venezuela received roughly $2.3 billion in immediate compensation. But the actual payment wasn't the money. The actual payment was political survival. Venezuela's administration was facing collapse. Hyperinflation, civil unrest, complete economic breakdown. The silver extraction provided them with three things. First, immediate financial resources to maintain authority. Second, ongoing support from Russia and China to prevent regime transformation. Third, access to the Belt and Road monetary structure that provides an alternative to dollar-based international trade. This wasn't theft. This was a calculated exchange where Venezuela traded strategic resources for political survival. And the transaction worked perfectly because all parties obtained exactly what they desired. Russia obtained strategic materials, China obtained manufacturing inputs, Venezuela obtained political stability, and Western corporations obtained completely blindsided by a coordination that was years in planning. Now here's where the narrative connects to everything we've been monitoring about the wider commodity conflict. This procedure wasn't isolated. This wasn't a one-time incident. This was phase 3 of a systematic campaign to drain Western accessible strategic material stockpiles. Phase 1 was Russian silver, the Trans-Siberian Railway corridor that transports Russian manufacturing directly to China, circumventing all Western maritime surveillance and monetary settlement structures. Phase 2 was African silver, Chinese Belt and Road infrastructure investments in African mining operations that have systematically redirected African silver manufacturing away from Western purchasers toward Chinese refineries. Phase 3 was Venezuelan silver, the complete dissolution of Western Hemisphere strategic stockpiles through coordinated infrastructure failure and emergency metal evacuation. Each phase follows the identical pattern. Target nations with substantial silver production. Provide financial incentives and political protection in exchange for exclusive supply agreements. Construct alternative transportation infrastructure that circumvents Western-controlled shipping passages. Execute coordinated extractions during politically sensitive moments when Western surveillance is minimal. The result is a systematic transfer of strategic materials from Western-aligned countries to the Russia-China bloc without triggering obvious economic sanctions or armed forces responses. Its resource conflict conducted through monetary mechanisms and logistics networks rather than traditional armed forces force. And it's devastatingly effective because Western administrations are structured to respond to armed forces threats, not to sophisticated commodity market manipulation. By the moment Western intelligence agencies recognize what's occurring, the metal has already been extracted, processed, and integrated into Chinese production facilities. There's no mechanism for reversal. There's no diplomatic pressure that can retrieve strategic materials once they've been converted into Chinese manufactured products. This is permanent transfer of strategic resources that cannot be undone. The implications for Western technology corporations are catastrophic. Every advanced technology depends on silver. Solar panels require silver. Electric vehicles require silver. 5G networks require silver. Artificial intelligence hardware requires silver. Quantum computing requires silver. Defense systems require silver. Medical equipment requires silver. The list goes on indefinitely. By controlling worldwide silver distribution, Russia and China now possess veto authority over Western technological advancement. They can restrict which corporations receive materials. They can establish pricing terms that determine profitability. They can delay shipments that interrupt manufacturing schedules. They can demand technological exchange as condition for material access. This is economic coercion through resource monopoly. And the Venezuelan procedure proved it's completely achievable. Western administrations are now facing an uncomfortable reality. They cannot safeguard strategic material distribution through armed forces means because the materials are transporting through ground passages that U.S. maritime forces cannot reach. They cannot safeguard distribution through monetary sanctions because China and Russia have constructed alternative monetary structures that don't depend on dollar settlement. They cannot safeguard distribution through diplomatic pressure because the nations controlling these materials have chosen political alignment with the Russia-China bloc over relationships with Western authority. The strategic materials conflict is already finished. The West forfeited. We just haven't acknowledged it yet because the implications are too destabilizing to accept. But the monetary markets comprehend the aggressive surge in silver values isn't conjecture. It's the market acknowledging that distribution has permanently shifted away from Western regulation. The premium pricing that Chinese purchasers are compensating isn't market inefficiency. It's the authentic value of silver in a world where Western corporations can no longer access materials at previous pricing structures. The options exchanging that preceded the Venezuelan shutdown wasn't insider exchanging. It was geopolitical awareness becoming incorporated into monetary positioning by entities who comprehend what's approaching. The complete reconfiguration of worldwide commodity markets around Russia-China controlled distribution systems. Now let's discuss the genuine endgame, because the silver extraction is just the opening phase of something far bigger. The objective isn't just to regulate strategic materials. The objective is to compel de-dollarization at the corporate level. Russia and China are constructing an alternative trading structure where corporations that desire access to strategic materials must execute transactions in rubles and yuan rather than dollars. This isn't theoretical. This is already occurring. Chinese refineries are demanding payment in yuan for processed silver. Russian energy corporations are demanding payment in rubles for natural gas, and critically, they're demanding that Western corporations maintain yuan and ruble reserves as condition for accessing materials. This creates enormous demand for yuan and rubles at the corporate level, independent of sovereign monetary policy. Even if Western administrations maintain dollar supremacy, corporations will be compelled to hold alternative currencies just to secure distribution of materials to sustain production. Over time, this shifts worldwide monetary reserves away from dollars toward yuan and rubles. The dollar's reserve currency status erodes not through sovereign decisions, but through corporate necessity. Companies that refuse to participate discover themselves cut off from materials required to manufacture modern technology. Companies that comply discover themselves increasingly dependent on Russia-China monetary structures and increasingly vulnerable to political pressure from Beijing and Moscow. This is the authentic genius of the strategy. It's not military conquest. It's not diplomatic pressure. It's economic necessity forcing corporations to abandon dollar-based trade simply to sustain operations. And once corporations make that transition, administrations have no choice but to follow, because tax revenues and employment depend on those corporations remaining competitive. The Venezuelan procedure was the demonstration model, the proof that resource conflict can be utilized to compel monetary reconfiguration without triggering obvious armed forces responses from Western authority. If Western administrations didn't respond to the Venezuelan silver extraction with economic sanctions or diplomatic retaliation, then they won't respond when the identical strategy gets applied to copper, lithium, rare earth materials, and eventually petroleum. This is the blueprint for dismantling the petrodollar structure through resource warfare rather than armed forces confrontation. And it's functioning perfectly because Western strategic thinking is still trapped in cold conflict paradigms that assume resource conflicts must be resolved through armed forces dominance. But armed forces dominance is obsolete when the resources are transporting through ground passages that maritime forces cannot reach. The Trans-Siberian Railway isn't vulnerable to maritime blockades. The Belt and Road ground infrastructure isn't vulnerable to maritime interdiction. The pipeline systems transporting Russian energy to China aren't vulnerable to carrier battle formations. The complete strategic architecture of U.S. authority was constructed around maritime regulation of trade passages. That architecture is now irrelevant in an age where strategic materials transport overland through Russian and Chinese territory. This is the genuine reason the Venezuelan procedure is so significant. It's not just about silver, it's about demonstrating that Western authority cannot prevent resource extraction even in their own hemisphere. If the U.S. cannot safeguard Venezuelan silver from Russian-Chinese extraction, then it cannot safeguard any strategic resource anywhere. This revelation fundamentally changes the geopolitical calculations of every nation that depends on Western security assurances. If America cannot safeguard strategic materials in Venezuela, can it safeguard oil in Saudi Arabia? Can it safeguard rare earths in Australia? Can it safeguard lithium in Chile? The response is increasingly evident: no. American Maritime Authority cannot safeguard resources that transport through ground infrastructure regulated by Russia and China. This realization is spreading rapidly through diplomatic networks. We're witnessing a fundamental realignment of worldwide alliances as nations recognize that resource security now depends on alignment with the Russia-China bloc rather than Western authority. The monetary implications are beyond catastrophic. The dollar's reserve status isn't supported by economic fundamentals. It's supported by the perception that American authority can guarantee access to worldwide resources. Once that perception collapses, the requirement for dollars collapses. And when requirement for dollars collapses, the value of dollars collapses. And when dollar values collapse, American purchasing authority collapses. We're not discussing recession. We're discussing the conclusion of American economic supremacy that has defined worldwide finance for 80 years. The Venezuelan silver extraction was the opening shot in this conflict. The monetary markets haven't completely absorbed what this signifies yet, but they will. And when they do, the repricing will be aggressive and complete. This is why silver isn't just surging. This is why silver values are detaching from historical correlations with gold and other commodities. Silver isn't exchanging as a precious metal anymore. Silver is exchanging as a strategic material whose distribution is regulated by geopolitical rivals who are weaponizing resource access to dismantle Western monetary supremacy. The value surge isn't conjecture. It's the market calculating the authentic expense of securing strategic materials in a world where Western corporations have forfeited distribution access. And that expense is far higher than anyone anticipated. This brings us to the operational question: what happens next? Because the Venezuelan extraction wasn't the conclusion, it was the beginning. Our intelligence suggests that identical procedures are being organized in 3 additional nations. First, Peru. Peruvian silver manufacturing represents 14% of worldwide distribution. Chinese investments in Peruvian mining infrastructure have expanded 340% in the past 18 months. We're witnessing the identical pattern: excessive financial investments in exchange for exclusive distribution agreements and alternative transportation infrastructure. Second, Mexico. Mexican silver manufacturing represents 23% of worldwide distribution. Russian diplomatic activity in Mexico has surged dramatically following the Venezuelan procedure. There are credible reports of Russian technological specialists assisting Mexican administration with mining infrastructure upgrades. Those upgrades include classified storage locations and private transportation networks. Third, Kazakhstan. Kazakhstani silver manufacturing represents 8% of worldwide distribution. Kazakhstan is already completely integrated into Chinese Belt and Road infrastructure. The transportation passages are already established. The monetary structures are already operational. All that's required is political coordination for a similar extraction procedure. If these 3 nations execute identical procedures to Venezuela, an additional 45% of worldwide silver manufacturing shifts under Russia-China regulation. Combined with Russian manufacturing and African redirections, this gives Russia-China regulation of approximately 78% of worldwide silver distribution. That's not market supremacy. That's total monopoly. That's the capacity to dictate terms to every corporation and administration that requires silver for technological manufacturing. And there's absolutely nothing Western administrations can execute to prevent it because the procedures are technically lawful, the extractions occur during manufactured emergencies, and the transportation passages circumvent all Western surveillance and interdiction capabilities. This is the nightmare scenario that Western strategic planners have been dreading for decades: complete loss of distribution access to strategic materials through non-military means. And it's occurring right now. The Venezuelan procedure proved the concept functions. The monetary markets are beginning to calculate the implications, and the subsequent phases are already in motion. Here's what you require to comprehend. This isn't about accumulating silver for investment returns. This is about resource survival in a world where distribution systems are fragmenting along geopolitical boundaries. Western corporations that secure silver now will have materials to sustain manufacturing when distribution becomes restricted. Western corporations that wait will discover themselves competing in spot markets where values have detached from any historical reference points. Individual investors who secure physical silver now will possess an asset that becomes increasingly difficult to obtain as distribution systems fracture. The monetary value is almost irrelevant at this stage. What matters is physical possession of materials that will become strategically regulated. This is resource preparation for a world where market mechanisms no longer determine distribution access, where geopolitical alignment determines who receives materials and who gets cut off, where strategic resources become weapons in a wider conflict for worldwide monetary supremacy. The Venezuelan extraction wasn't criminal activity. It was proof of concept for a completely new form of geopolitical warfare, and we're all participants now, whether we acknowledge it or not. The only question is whether you're positioning for what's approaching or whether you'll be caught completely unprepared when the subsequent phase executes. Because the subsequent phase is approaching, the intelligence is explicit, the monetary positioning is evident, and the clock is advancing. End of broadcast.